What's up, Mortgage Coach community? I am sitting down with Gina Myers out of Fairfax, Virginia. What's up,
You
Gina?
got it. It's nice to see you, Dave. Thanks so much for having me.
Yeah, no, well, it's great to meet you. I'm always looking for who are some of the top loan officers that are using Mortgage Coach more than daily. And you got on my radar because you beat out Jeremy Forcier and Chad Baker at cross country doing the most TCAs last month.
Very cool. I'm impressed. I'll have to call Jeremy. He is the one that introduced me and actually educated me on a video call on how to use Mortgage Coach. And my team and I implemented it, and it's been a game changer. So we're really excited. I'm grateful to Jeremy for introducing me.
So Jeremy, shout out to Jeremy, and he
Jeremy's
usually
the best.
does. Yeah, he is the best. In fact, him and Dan Keller are going to be on tomorrow's call talking about the same thing you and I are going to talk about right now, which is how to win with rate shoppers. And by the way, guys, if you're listening in, Gina and her team have created 103 total cost analysis in the last 30 days. Jeremy has done like 89, but he'll probably beat you next month now that he heard that. Somewhat, he'll probably be at 120.
He's not competitive at all, so it's fine.
No, loan officers aren't competitive at all.
No, we are not. Oh, yeah.
So Gina, I have you down. It looks like you're on track to do about 200 million this year in volume. Is that right?
That is our goal. That is our team goal. We are on track, and so let's hope the rest of the fourth quarter pays off so that we can achieve our team goal and head out on a little mini vacation.
I love that. I love that. And about 400 families, a little over 400 families served.
Exactly. Yep. Our average loan amount is just slightly over 500,000. So yes.
So killing it in every way. This is our first interview, and I can tell already I'm going to want to have you back and do a full 1 hour top producer interview. But right now, I have been hearing from a lot of our members that rate shopping is up. Like there's just an increase in how much people are pushing on rate, and also people have lower rates. There's lenders out there that are, really buying the market. How is it for your market?
Exactly. Anytime you're in a rising rate environment, historically, you will experience more rate shopping. As much of a relationship as we can create with clients. When you get to that point for locking in, sometimes you're a little surprised that they may tell you that they're shopping rates, even though you've been helping them for months with finding the right home. And so using Mortgage Coach has been really helpful because, and this is something Jeremy taught me exactly, was that we give them the options. So what I'm trying to do is say to the client, hey, now that you're under contract, let's look at rate options for you. And then we show them, and it's very clean. It's in an analysis where there's 4 across, and we're showing them rates with buy down options. In the past, that was not something my team and I started with, and I think I probably lost some business not showing the points because maybe I felt my own opinion was this doesn't make sense for them to buy down. But it's not my choice, it's the client's choice. So what I tell clients is, now that you're under contract, we will give you all of the options. So what I'm trying to say to them is they don't have to call anyone else. They don't have to shop around. And that's exactly what we do. And so we provide the analysis, and oftentimes, like, for example, I have a scenario in front of me here where in this area, it's high cost, right? So for this specific scenario, the sales price was 1.7 million. So when you look at the cash to close for different rate options, and they range from 406,000 to 423,000, it's not that much of a difference, right? And so the client is, hey, I really like that 2 5/8 interest rate because I can tell my friends or my neighbors that I got nearly 2.5% interest rate. So my loan partners and I are saying to each other, can you believe it? Most people are choosing to pay points. And that wasn't something we realized. And it also is eliminating a lot of shopping.
So let's just make sure everybody gets it. And if you wouldn't mind sharing your desktop, you mentioned you had a TCA in front of you, because I want to make sure everybody gets this. Part of winning with rate shoppers is delivering value and options before they're even thinking about shopping you. So it's not just waiting until you're grinded to like, oh, let's start delivering value and negotiating. No, it's the moment you have a buyer, every buyer, regardless of how sophisticated they are, So walk us through the options, and then I think you use video too. If you could just speak to that and do it in the spirit of you're avoiding getting shopped because you're delivering value and options. And then if you get shopped, or if when, let's do some scripting around how you handle that.
Okay, great. Yeah, this particular client was very interested in rate options. We knew that out of the gate, so we gave more than normal. So typically I like to provide three, because more than three can become a little overwhelming, but some clients feel like they want more. And so in this particular scenario, we chose rates from 3% marching down to 2 5/8 with the various rate and points associated. And in the TCA, we would highlight the cash to close and the monthly payment. And then obviously everybody knows the video in the right hand corner, we would walk that through with them. But as far as scripting goes, I wouldn't, not overdo it, but I would simply say, hey, we want you to have all the options. If you want to talk through these, let us know. But this gives you the starting at no points all the way down to 1 3/8, and you can compare the monthly savings. We will always calculate the break even on the video by saying it verbally. I find that people are not reading anything anymore. Even internally, no one's really reading. So less is more, and the more interaction you can give them, the more they feel like they had a conversation with you, and it's much more. There's a lot more trust there and relationship.
Good. So do you usually go up to 1 3/8 points on rate, or do you sometimes go up to 2 points? What's usually the range in pricing for your options?
That's a great question. I would say it's 1.5 has probably been our max. I rarely show 2 points. I would say because loan amounts in the area are high. So when we start showing the higher points, the numbers start to get drastically different. But yeah, I would say it's extremely rare. Less than 5% are we showing more than 1.5 points.
And so in mortgage coach community, we're a community, guys. So we're all in this together in this particular conversation in this market. Her lowest rate, highest points is 1.5. What's yours? Put it down below. If you're showing a rate option and you're going to 2 points consistently, it'd be good to know that. And then is usually your lowest cost, highest rate, is that usually a no cost loan or just a no point loan?
Well, shifting from this type of buyer over, nearly 2 million to the first time home buyer, oftentimes, for example, if I'm showing them a bond program, that could be an option, but I always really like showing them, Fannie Mae Home Ready or Freddie Mac Home Possible, 3% down, and then giving a lender credit. So I go the other direction as well, even with like a refinance or something like that, where we're trying to keep the cash to close very low. And I'm trying to suggest them towards a product. Because if I can compare them to the bond program that has a higher interest rate, and if I can compare the cash to close to be very similar to a Home Ready or Home Possible with a lower rate and a much easier process for me and my team, I will show obviously a negative discount point, so a lender credit.
Love that. That makes a lot of sense. If you go ahead and stop sharing your screen, by the way.
Okay.
And then what percentage of the time do you do videos, or have you seen adding the video improve conversion and improve value?
For me, video it was huge. So when I implemented this, I did get some pushback from my team members because they felt like, well, Gina, you're the face. Like they want to see you. And I thought, okay, well, maybe I'll do all the videos, but time just doesn't allow for that. So my team was asking me, how can we increase our conversion? And I said, let's test it out. I want all the loan partners, my loan partners help me prepare the loan estimates and send them to the client. So I said, I want everyone to do videos this week only. And the response we got from the clients was amazing, through the roof, emails. I thank you so much. I really appreciate it. But also, I love seeing you and I love the video. Uh, and then that was my one loan partner did one. She was freaking out, super worried. We got that exact email, and I was like, okay, I'm done here. Like, hello, do you see this? That client, and especially rates were going up when we were working with that client, and we kept offering higher rates. She didn't call anyone else. You know what I mean? I think they really feel like this is so much more than I would get if I just walked into my bank or, called an online lender. So I really like that side of it because again, we are relational and my goal is for my team to also create a relationship with the client. And so that's a way we can get that done. Actually, yesterday, my team member said there was a situation where it was an unmarried couple. One had a phenomenal credit score, one not so great. It ended up making a difference of $400 a monthly payment. And she was a little worried how to deliver that information. And so when she did the video, they loved it because they could hit replay, they could play it over again, they could watch it individually, they could watch it together, and they understood and they were very grateful for us to give them that option versus just saying, "Oh, you're applying together, you have a 600 and you have 800. Here's your rate." We gave them the option. So,
Love that. And so guys, I want to make sure you're getting the takeaways here. If you want to win with rate shoppers, it starts with giving options at the point of sale, interest rate options. So they are shopping on your platform. It's putting a video on it. So you're personally connecting and you're improving the communication.
mhm,
And then of course, you're still going to get rate shopped. I mean, it's still going to happen.
mhm.
We're going to cover that in a lot of detail tomorrow with Jeremy and Dan Keller. We're going to spend a whole hour on this topic. But before, I would like to know, when you do get rate shopped, do you have a common approach or a common first move that you make or some common language that you use? Anything come to mind?
Sure. Oftentimes I completely understand. So I will agree with them initially, like I as far as saying, I want you to feel comfortable. So I'm glad that you are, doing your research. That makes sense, making them feel good about, what they did, because even though they might be awkward saying that to me. And then I'll say, look, like I'm in your court. Like let's compare it. And I'll ask them to send me what they have. And then I even have done video calls. So they will share it with me. And what they don't realize are the points associated. So I'm all about transparency, giving them the options and comparing it line by line. And oftentimes, what they're not seeing are the discount points. But sure, I mean, yeah, if I get beat and I can see it and we talk through it together, then the market moves. So I could say, hey, look, the timing was great. We can go ahead and match it. Would you like to move forward? I mean, I don't know that I say that too much because it's not like we get beat that often, or what they're providing to me isn't exactly apples to apples. I might also share with them another way to skin the cat, so getting them away from the rate and more into mortgage insurance. Okay, well, there's many ways to cover mortgage insurance, and that this platform is also great there. So I try to get them away from the rate, more focused on the cash to close, the monthly payment, and educating them about mortgage insurance. So, yeah,
So write all this down, guys. First of all, make the people feel great. You don't want to make them feel awkward. Get their options from it. A Jeremy Forcier move, the way he would do that is he'd go, "Oh, could you forward me the total cost analysis they did for you?"
mhm.
And Jeremy, he'd just be quiet until it was like, "Are you still there?" And he's like, "Oh, they didn't give you the transparency and options?
Mhm.
Well, give me the rate that they did." So anyways, I recommend, guys, ask for the TCA when they tell you
Mm.
they didn't do that. Go, well, send me what they gave you. And then you'll notice she's not afraid. Like, let's make sure we're comparing apples to apples. And if it's apples to oranges, she's comparing it. One more varsity move for you guys to consider listening to this is be looking at, once you've figured out, hey, here's what they're getting with me, here's what they're getting with someone else. And let's say it's still an eighth of a quarter better. Look at what that cost is over 5 years. And what I hear from sales managers all the time, if the cost is under 5,000 over 5 years, usually it's really easy. I mean, between the value you've given, who you are, 5,000 over 5 years, and they're just like moving on. Now, if it's over 5,000 over 5 years,
Mhm.
you may, to keep the loan, have to do an exception. But
Mhm.
instead of negotiating eights in a rate, which we know costs 50 basis points, we
Mhm.
can now negotiate dollars. Like, oh, it's 15,000 over 5 years. I get that down to 5,000, or I get that down to 7,000. And now you're doing a partial exception. So a couple ideas for folks listening to this. But the big takeaways are: ask good questions, deliver options, total cost analysis for everyone, put a video on it. Anything else you would add to that, Gina? Just, the audience and you've listened to these calls before. Anything else you think people should get from how you're proactively and reactively dealing with rate shoppers?
Yeah, I mean, I would gently and very, in conversation, remind them of why they chose us, right? So, we love working with you and Sue, who recommended us, and it's been so much fun helping you through this process. And how about the time we, called the listing agent at 10 o'clock at night and explained to them that, you were the one to pick, and just like reminding them of the story, reminding them of how we got here. You know what I mean? And I think people, this is rate, these are houses, these are rates, but ultimately we are humans and we like to work with people we like. And a lot of times, even if I was an eighth hire, they still will choose me, or we'll talk about, the ability to close quickly, but reminding them why they decided to work with me initially. And they're like, okay, well, I just, I got this rate from big bank and they just lobbed it over and I was waiting for it for a few days. I just try to remind them of the experience and that this is a big deal, and it's not without stress. Like the next steps are, you're going to continue to need us in your corner and explaining and making sure that you're on track. So oftentimes just, going back to the relationship and why they chose us and why they were referred to us initially helps.
Good ideas. And another one you made me think of is, remember, guys, to always make the promise that, hey, I'm going to help you with this transaction, and then I'm going to be managing your mortgage. This total cost analysis, I'm going to be
Yeah.
doing a review. I'm going to be making sure that you're getting a great loan today, and I'm going to be managing that loan for the life. So key stuff. So you have not always been a mortgage coach. I mean, you're pretty relatively new.
Very new.
Why did you start using a mortgage coach?
Sure. It was I felt that the PDF emails documents we were sending was quite antiquated. I was getting response that people were looking at it on their phone, and the PDFs often go to the bottom of the email. So you would say, check out these loan scenarios in so many words, and then they couldn't find them because they were at the bottom of the mobile screen that wasn't visible showing a PDF. I also felt like we were recreating the loan scenario within the body of the email. So I felt like it was a lot of extra work. Like I was doing the scenario, did it print correctly, PDF, scan, whatever, attach, and then I like rewrote it in the body of the email. I felt like it was very inefficient. And I heard from a lot of people, and change is hard, right? Change is hard. And my team gave me a little pushback, but I said, this is what we're doing. And after talking with Jeremy, he gave me the quick rundown and how fast it was once you can, learn the click strokes and all that good stuff. I also think it's just really a sign of the times. Technology, I mean, people don't want to be pulling up PDFs and printing things out. They want to look online and they want to be able to access the link. They want to share the link. They want to check your video out again. So it was more consumer related than it was actually for me I was comfortable with the PDFs, but I felt like from a consumer's perspective, I had to keep up with what they would expect, technology as well.
And what have been some of your favorite things about Mortgage Coach? Because you and your team have done 820 of them now.
That's crazy.
What has been your favorite thing about it?
One, how fast it is. So we can recreate, copy the analysis and create a new mortgage coach very quickly based on a different property. So they love that. We can obviously pull it up and talk through it together. The clients can share the links. I mean, that might sound like a broken record, but I love the video. Especially millennials and they really like seeing people. I think they're used to seeing live videos on their phone, but it is much more relational than just. I think it's easier to compare rates when you get a PDF from one lender and a PDF from another, and this is what you're comparing. But when you compare ours, you see a nice, friendly face, where it is a live human, right? So it feels good. And the comments we've gotten back from clients are like, wow, I love seeing you. Like this was great. I like seeing your team. People want to know, like I had a client today, like they were asking questions like, now which team member are you? People really want a face, and so if you're a face and a human and not a rate, it's easier.
Yeah. And guys, if you're listening to this and you're local and you're referral based, you need to deliver more value. And at the end of the day, it's your personal connection, and you should try to personally connect every chance you get.
The
So
agents love it too. Sorry to interrupt you, but we'll copy the agent on the email and they're like, love this video. Like, when did you start doing this, Gina?
So
Because
agents
they
love
know.
it.
Mm-hmm.
That's huge. So Gina, I hope you're cool. I would love to bring you back for a Tuesday interview and
Sure.
have a full hour to unpack your practice, ask a little more questions about your team, how you're using Mortgage Coach as a value prop with agents. Let's face it, in this market, with refis not gone, but drastically reduced, it's never been more important to add realtors and keep the realtors you have. So maybe we center the next conversation around how you're keeping the current agents and winning new agents, and where Mortgage Coach fits into that. You be cool with that?
That sounds great.
All right. Well, any last words of wisdom or advice to folks? It can be Mortgage Coach related, just closing before we wrap it up.
Like anything, I wish change is good. It can feel awkward or uncomfortable, especially in a really busy time. But I wish I implemented this a long time ago. I would have saved myself a ton of time, especially as if you're a new agent and, new lender, and you're trying to crank these out, or maybe you're trying to do them as a quick analysis. It gives you that edge and the ability to do them quickly, and stay in front of the client. So yeah, I would suggest sooner than later, especially if things start to slow down a little bit. Take advantage of that time and educate yourself on a new platform like Mortgage Coach, because it will get busy. Things, it's a markets go up, markets go down. So take advantage of the time and don't just take half days or whatever. So
and make the change, guys. If you're still delivering fee worksheets, you are not delivering the ultimate mortgage experience. You're not playing at the highest level. And again, if you want to play at the highest level and be your best, get on the Mortgage Coach team, go to mortgagecoach.com. And Gina, I can't wait to interview you again. Thank you for now being a leader in the Mortgage Coach community.
Oh, that's so cool. Thank you.
You're almost a grandmaster, and I can't wait for the next.
So funny. Thank you, Dave. I appreciate it. Thanks, everybody.
All right.